Okay, hello and welcome to a pre-recorded Casual Friday, brought to you, of course, by the FTX app, best mobile trading app on the market. It's got your Bitcoins, altcoins, stablecoins, which are looking better by the candlestick, unfortunately, as we'll come to discuss. Hopefully we're wrong. But anyway, feeless trading, asset swaps, all that good stuff. Best mobile app, go get it. Support FTX because they support us. We're recording Casual Friday today. Plenty to talk about, market stuff, non-market stuff. Just catching up in general. As always, like the video, subscribe, do all the YouTube stuff. You know, Doug, I was thinking earlier whether I would listen to Technical Roundup if it weren't me doing it, kind of thing. And I think, you know, that there's some like different considerations. Like obviously the production quality isn't like A++, because we don't have like a team. We don't have like the face cam and the editing and all the other stuff that would like take it to the next level, right? I don't know if you watch much YouTube, but it's so like the standard seems so professional nowadays, even within crypto. But it's also other weird stuff like you're watching a 10-minute video and the person a lot of the time can't get through an entire sentence without like 10 jump cuts, you know? And it's so sort of engineered and disingenuous, yada yada. So I think one of the good things I landed at when I was just thinking about Technical Roundup in general, obviously not the most popular show in the world, right? But I think it's fundamentally just very honest, right? As two people with a decent amount of experience in crypto and lacking the incentives to be like, oh, next altcoin to go to the moon, whatever, because that altcoin paid us for marketing, right? Or just in general, we're not directly incentivized to shout or beat the drum of one side of the market over the other. I think fundamentally you get like a pretty decent, honest show with healthy skepticism and good experience as far as these things go. Or at the very least, we don't get like sucked into trends particularly easy. Sometimes for better, sometimes obviously for worse. That's kind of my internal review on why someone would listen to this. What do you think? Maybe our audience can tell us, of course, Larry, right? Let's just like...
I mean, we're the boomers on YouTube. We don't really understand how the entire YouTube thing works, but at least we tell it how it is, I think. I mean, that's what I tell myself anyway. I like it
to go to sleep at night. Yeah. I agree with that. Hopefully our audience does as well. Leave us a comment. Why do you listen to Technical Roundup if you do listen? Cool. So let's do market stuff first, and then we'll do non-market stuff. And then I think in the future, at least every other Casual Friday, we want to do this Q&A type of thing. So we'll tweet out like questions for Casual Friday in advance, and then answer the top-rated ones or whatever it may be.
Oh, you know what kind of questions.
Oh, I know, but the thing is, I hope we've mitigated that with your like dating show thing that you're going to do on Thursday. Because you know my nightmare scenario, right? That becomes a regular occurrence and just blows up way past Technical Roundup or anywhere.
I mean, you know it will.
I don't know how I'll cope with that. That's another 10 hours with my therapist at the very least, if that were to come to fruition. We can touch on that a tad later. I'm sure people want to hear what we've got to say about big candlestick stuff. I mean, on my chart, I've got the daily chart open, right? And I've just added all the boomer moving averages to it. So the 21 weekly, 50 weekly, and 200 daily. And I'm just going to draw a big red kind of range high at around 44K on the daily time frame, like pretty much that first swing high early in the year. And you know, the obvious like range high shelf, right? Now, to me, at the moment, this looks like the market broke out of a multi-month range, hit a bunch of important mean reversion targets in the form of those moving averages, and also just in general attempted to break out. The market wasn't accepted above the range high or through those important reversion value areas, if you will, and has now kind of failed the breakout and ended up below it. So it looks like, at least on a daily closing basis, the weekly maybe has got a chance to save itself, and I know you think there's some disagreement there, but on a daily time frame basis, this looks like a failed breakout after testing important high time frame resistance, and that's bearish, to me at least. It becomes less bearish, obviously, if it reclaims, yada, yada, but I'm just really tired of making these excuses for the market. Do you know what I mean? It's like, oh, well, if it reclaims, it'll be fine, or if it stays above this breakout, it'll be fine. It feels like we're always giving the market like a way out. If it's strong, it shouldn't have to rely on all these caveats and qualifiers, right? So TLDR version is the range breakout appears to have failed. If that remains to be the case, and I think in terms of targets, you've got the Donald trend line as target one, and that's somewhere in the 40s, depending on when we get there. The less optimistic target is that now that the range high has failed, the next move would be towards the range low, which is back at 30 something. But I think no matter how you look at it, the range breakout failure itself, or the failed breakout, isn't a constructive pattern, especially when it's coming off of resistance. And we wrote in Technical Roundup, the newsletter, that you can be bullish because there's a breakout, but you have to flip pretty quickly because the market's fucked if it's not a real breakout. So are we fucked? Is this sort of the newsletter worst case / invalidation playing out? What do you think of this whole structure?
Yeah, I mean, I kind of have to say we are, because it's the exact same setup that I had when we broke 60K, right? I was very, very vocal about having to be bearish at 60K when you started breaking it, because that was the prior breakout that we had that failed, right?
Do you want to draw that, by the way, just on the weekly time frame?
Come again?
Should I have that on the screen? I guess it's the weekly swing from like the last top of 2021, right? And
yeah, exactly. Exactly. And we just kind of like, we swung up towards like 70K, swung back down, didn't hold 60K. And that was bearish, and it was very clearly bearish. And it's the same setup now, where it's obviously on a lower time frame, given it's on the daily rather on the weekly, but it's still the same setup. So technically speaking, you should be bearish. Your invalidation is in the 47Ks, and your target should be range low, which is 33K, right? Now, for a lot of us, it doesn't really make much sense to like be super, super bearish. We just want to pick it up cheap if we get it, which just basically means, okay, we have like this bearish setup playing out. We don't do anything. We just wait until it's really, really cheap, and then we buy. And that, I think, just makes sense at the range low at 33, 34. So yeah, given that, I think the assumption has to be this is bearish and it's going to go down, because we had a bunch of good news. We had a bunch of altcoins actually, which is really interesting, because this seems to be the case all the time when we have these kind of breakouts where people get really excited and start buying altcoins instead of Bitcoin and ETH. Where we had a bunch of altcoins go up, right? So you can kind of see how excited crypto was just based on that fact alone. Like that we had these altcoin rallies, and then we had Sailor buy, we had Duck One buy, we had a bunch of positive news, and prices went down, right? And the S&P hasn't performed too poorly if you look at it. This is mostly like we've had a little bit of outperformance on the way up, and now we're underperforming on the way down. It's just kind of like crypto itself isn't showing real strength compared to like the traditional markets. It's not really doing anything besides going sideways, and it has lost the breakout. So for me, it makes sense to just be on the bearish side of things until proven otherwise. And be that, like, for me, I'm not shorting, but if you want to short, this seems like a decent place to take that bet, in my opinion, just based on the fact that you have a really clear invalidation. There's obviously a chance it doesn't play out. It's just in trading, it's always a chance that it doesn't play out. So don't bet your entire portfolio on it. And in general, like less experienced traders just should not be shorting, in my opinion. Just buy at support instead, because if it goes lower, you can just buy more, and then it's going to go up again at some point and bails you out. Whereas if you short and you're wrong, you cannot just short more, because you're probably just in general wrong, and then you're going to get liquidated if you short more. So it makes more sense to kind of look for the bullish setups, in my opinion. But it's obviously not looking too good for me anyway. And you mentioned that the weekly and the daily disagree, and that's kind of something that I think is quite important, because we are at weekly support right now. It's just the daily pattern has failed. So it's not enough for me to kind of be bullish.
Is your weekly support the January cluster?
Yes.
Yeah. Okay.
Yeah. So basically what happened is like the cluster we broke down, ran into it, it acted as resistance. We ran into it again, acted as resistance again, and we broke it, right? Yes. So all things considered, that is like a decent support. It's just the daily is pretty obvious in its breakdown. So it doesn't really make much sense to be bullish for me, even though we're at weekly support. If anything, if you kind of consider both of those things, it makes sense to be neutral at best.
And what's the invalidation, by the way, for that? So, the daily breakout, the weekly is at support. What does one of those timeframes have to do for you to say, okay, maybe it's not that fucked?
So the daily, in my opinion, has to at least kind of reclaim 44.4, which is the level that we lost. But I'd much rather see it go back above 46K. At that point, I think there's a pretty damn clear target of 52. So you can just kind of if you get any strength there, you can just buy into it, and it's very, very likely to go to 52. If you buy 44.4K reclaim, there's a chance it just chops and goes back down, goes back up. Like, I'm not entirely clear on that front. But yeah, that would be a good first sign, kind of reclaiming the lost breakout. And then, I mean, the weekly, that would then still be fine, right? Yeah. So like the daily kind of bearishness has to be invalidated, and then it's unfucked in your words.
Yes.
And yeah.
What's your gut feeling?
My gut feeling is we're going to go down.
Okay.
It
just feels like we just keep shifting, not we as in you and I. It just feels like the market's happy to keep shifting goalposts when it comes to like, okay, we're breaking out. Okay, fine. Consolidation post-breakout is fine. Okay, a quick retest is fine. Okay, a quick retest of the retest is fine. Okay, it closed below, but this could be a deviation and it reclaims that's actually bullish. You know, you just keep like giving the market ways out to continue proving it's strong as it just moves lower. I didn't disagree with anything you've said. That weekly level is fine. But for me, the daily breakout, until proven otherwise, this isn't what you want to see, right?
Yeah.
And also, I want to note the monthly TA redemption arc, right? I know you weren't a fan of the monthly mid-range cluster thing, but you know, as far as line make boing goes, that's been pretty fucking decent. Like if you look at 47.2 on the monthly time frame, it's like on that monthly level on an intraday time frame, it's like an outrageously accurate level. Like that was really, really good, and one of the ones I covered on stream as well. And that was our concern on weekly open, and also just when speaking privately, is that the market hit its reversion target, right? Like all these boomer moving averages, the range midpoint, you had Solana rally like 80% to resistance. ETH just went bananas and arguably overshot resistance. The market definitely hit like a take profit type of spot. And then you wanted to see a really aggressive buyback or just continuation given the significance of the levels that were broken. And we're just not seeing that at the moment, right? Like the best case is that this never retested in the first place. The second best case is that it's like a flash crash retest and then it goes up. There's no kind of best case where the retest fails, right? Unless we're just playing like mega chop, much longer range. Maybe this ends up being some sort of deviation, yada yada. But you have to kind of look at the pattern that's in front of you, right? And at the moment, the most recent evidence suggests a failed breakout, which is never nice, at least in crypto.
Yeah, and I mean the thing is, in bear markets, right? You get these rallies caused by positive news, caused by anything, right? But if they don't sustain itself, it's just that rally that you look back on and you're like, oh shit, I sort of should have sold that, right? And we've seen that in 2018 and 2019. And then we bottomed back on like bearish news, right? Like you have bearish news come in and then the price doesn't go down, and that's bullish, right? It's the same thing here where we had bullish news come out and the price didn't go up, it went down instead, and that's bearish, right? You just kind of have to go from that standpoint and assume that information that you're getting is correct, right? Because if you every time something goes against you, you're like, okay, this is deviation or this is a trap, then I mean, fine, take your position, always kind of stick with it, but that's not really what trading is, right? You kind of have to react to the information that you're getting and kind of be objective a little bit. And for me, just based on the fact how these last breakouts have played out and how in general like false breakouts play out in crypto, is just like ignoring this one would be foolish, I think.
Yeah, makes sense. I didn't disagree with any of that. Let's look at ETH, because that was leading the market for a bit, and ETH BTC started to look scary. On the weekly time frame, it cleared this like 3K area. Let me get an empty chart up. Yeah, so there was a bunch of like stuff around 3K, right? And then it blasted through that. And depending on where you choose to draw your levels, just similar to BTC, this is an area of weekly support, right? So if I use the same cluster, the 10th of January weekly cluster, right? Using that as an example, even if it's not the optimal level, let me see if I got the 10th of January 2022 weekly. Same structure as Bitcoin would also qualify as support. Is there a world in which we're kind of bear-tarding this daily breakout BTC bad, and then you look on the weekly, ETH retesting support, BTC retesting support, next week is green, and we're like, oh, we fell for it.
I mean, yeah, there's there's a chance that happens. I just think if it does happen, it hits the invalidation levels on the daily anyway, and then you ruin it, right?
Yes.
Which I'd be totally on board with. There is a chance that we're bear charting the bottom. There's always a chance. Like if you're bear charting, yeah, it usually is near the bottom. But for me, it's just, I cannot ignore this. It's just one of the best setups that I get in crypto. We actually talked about this, if you remember, when we were consolidating. We're like, okay, yeah, this is going to break out one way or the other, but you probably fade it at some point, and then you actually get the real move. And I mean, yeah, it is kind of what it's been.
Yeah, my whole thing
into.
was, if it breaks, leave it. And then if it deviates, that's when you step in, right?
Yeah. Which is right now, right?
Yes,
I mean,
yes, it's right
yeah.
now. Okay, be right back. No, I'm just gonna go open a bunch of positions. Yeah, okay, for ETH. And also, I think what makes me existentially uncomfortable for ETH is that it never really tested its range low at around 2K, right? Or like depending on where you want to draw it. Like iTest goes back to the 1900 or thereabouts high, just under 2K as a level. And that missed every time because Bitcoin would hit its monthly level before that and then obviously drag the market higher with it. So that bottom seems, if the market's going to be weak, that doesn't seem like a compelling. I wouldn't be looking for a higher low is probably one way to put it. Without that range low being hit. The 1900 or whatever that level is on the weekly.
Yeah, I do like that level as well. I mean,
and it's fresh, right? There's
nothing. Yeah. The thing with ETH is it is exceptionally strength into Bitcoin strength. Into Bitcoin weakness. If you just look at ETH BTC, it's just been basically going sideways at worst. It's kind of been up the last few weeks. And the narrative is a really strong one, right? With the merge, which I think hasn't really picked up too much mainstream attention.
Listen, there's a reason for that, right? If someone had my family hostage with guns pointed to their heads and said, you need to explain what the merge is, or they all go, there'd be a lot of blood wherever they're being held, because I couldn't tell you what the merge is. I just know that it's a narrative. It's like an Ethereum upgrade thing, right? And that's as far as my knowledge goes. And there you go. That's a 5-year crypto veteran for one of the major coins telling you the depth of his FA knowledge. But it's just like EIP 1559, right? As soon as people started giving a shit and caring, that was it. It was already mega priced in, and the actual upgrade itself, in terms of from a trading point of view, in terms of price impact, it was well and done with, right? So maybe it's a good thing that I don't know shit and that I'm ignorant about this, because it could suggest that it hasn't fully entrenched into the public consciousness yet.
Yeah, the ETH top is going to be in when Cred explains to you guys what the merge
yes,
is.
That's the best market signal for sure.
But yeah, I think if I wanted to bearish something, it wouldn't be ETH. I don't hate on ETH. If Bitcoin goes down, obviously ETH/USD goes down as well. At least most of the time, and I think this time would not be an exception. But if you see, I think in general, in the next week or 2 or 3, if you see Bitcoin strength come in at some point, like Bitcoin hits a support level, maybe it's 30K, maybe it's higher up, and show some strength, I'm going to be buying ETH instead, just into the Bitcoin strength. I hope that before that happens, ETH kind of wipes out, gets rid of some of the people already positioned bullishly.
Who don't know what the merge is.
Yeah, but I mean, I'm not entirely sure if that happens. ETH looks pretty damn good to me. It's the reverse setup. I don't know if you have my weekly trend line on ETH BTC on the weekly.
I can get that up. The pattern failure thing.
Yeah, which is basically the exact opposite of what we have with Bitcoin, right? So Bitcoin kind of had this false breakout to the upside. ETH had a false breakout to the upside, ETH BTC, and then a false breakout to the downside. So it's I'm not really bearish on ETH BTC. I could see that go higher. I'm not entirely sure where ETH USD is going to go, though, just based on the fact that I'm not too excited about Bitcoin.
So TLDR of the technical view is that majors in an area of weekly support, but until Bitcoin fixes its daily failed breakout, it looks like shit.
Yeah.
Cool. I think that's pretty consistent. Also, just completely eyeballing this, I don't like anything until sub 40 for BTC. I know that's probably like a vile and unpopular opinion. I can see some sort of bounce from maybe just the trend line structure. You know, that trend line, the one on the daily time frame for BTC, the one you were talking about on weekly open or whatever, which looked to have a failed breakdown. Like maybe you get a trend bounce from that, and then the channel traders get to eat for a change. But just in terms of like higher time frame structure, if this is a real failed breakout, A, I don't like the trend line in general, and B,
Yes.
I wouldn't expect it to stop, or the selling to stop that early if it's a true bearish pattern. You can't be like, oh my god, it's a failed breakout of the most important level, multi-month consolidation with a bunch of public buying all underwater. Oh, and by the way, it's only going to go down like 5% of the trend line, and then it's all, that's fine, we fixed it. It's just like when 6K broke. Also, I just realized that analogy just becomes less acceptable with every year that passes, because like, what are you talking about? These are like fairy tale prices. But when 6K broke, it'd be the same as saying, well, I'm going to, 6K big yearly level, most important level on the chart. If that breaks, I'm going to buy the support at 5.7.
A lot of people actually
and
did
they
that.
did that, and they did that. But, they paid for their mistakes. So I think it's a similar type of thing where maybe it's a decent like take profit sort of thing if the failed breakout trades start to unwind, like pumping the higher low at a trend line. But it doesn't seem like a bottoming type of structure to me, unless the market's like really strong, which would be kind of strange.
The reason why I don't like it as like a buy is because basically the pattern, right, broke to the upside and had a false breakout. So it doesn't really make much sense for the pattern to hold again on the downside. I just think like, if anything, you'd want to have like a false breakout below that trend line.
Yes.
And then come back up again to kind of make this entire thing into chop, which would be fine. But I would not want to be bidding the trend line either. I think
it's also been tested more times than Shanghai's residents at this point, right? So.
Yep, exactly. I mean, it's like legitimately either I think you buy into strength or you buy 33K, which is already quite aggressive to me, just based on the fact that 33K has been tested a bunch of times as well. I think that's kind of the conservative view that I have is you either buy like really low, which is range low, or you buy into strength.
Because everything else is beaten up, right? As far as levels and structures go.
Yeah, like it's just been really choppy. Yeah, it's been choppy. Everything's been tested a million times. Just I don't trust any of it, and I might be. And there's a good chance that I'm going to be sitting here and the dip goes and we go to like 39K and then rally back up again, and then I get bullish above prices where they are right now.
And then you learn what the merge is.
Yeah, and I don't really care too much, honestly, because you don't want to be at risk, right? Like if I'm in position right now on the long side, I don't know where to kind of get out, right? Like I don't know.
Yesterday?
Yeah, I mean that's basically how it would go. Because where's your invalidation if you're long right now? Your invalidation
I don't know. Like it's hard, right? It's probably like at the low or something.
Yeah, and I mean at that point it could easily get run and then it springs back up if it's like legitimately a trap.
It's a tricky trade.
It's like it's impossible for me. And then I've seen people kind of suggest a stop loss below 40K, and I think if this is at all going to play out to the bullish side, I mean that's probably gonna get run anyway.
Yeah.
So it's like it's impossible to be long for me here, and therefore I'm not. But people tend to kind of look at the low time frames and they're like, okay, this broke down and it's not immediately breaking down fully. So I'm just going to get on and kind of hope that it's a trap. But then you look to the left side and you look at what happened after 60K broke. And you can kind of see how people didn't really realize how bad that was either, right? Like it went sideways downwards for like 2 weeks before people realized, holy shit, we've lost the range high. This is actually pretty bad news. And
Unless you're a technical roundup reader, wink, wink, right?
Yeah, we actually called that one.
That was good. Yeah, that was good. It's our one good call of the year.
I mean, if that's the one call that you did during the year, that's already
the other call,
good.
which I'm really happy with, just because we beat that drum a lot, is the fact that liquidation wick on 4th of December was very unlikely to be the bottom. Oh, yes. the amount of times I basically found, we rewrote the same argument. Wow, that's a tongue twister. We rewrote, if you speak British English, whatever. Because that was one of the most annoying times in the market narratively, where it's like, oh my God, the OI has been flushed. Finally, the weak hands are out of the market. It's like, no, speculation is over. Pack it up. Like that's the market breaking. That's literally what happens. And the amount of videos we did and article write-ups on how these macro open interest deleveraging events are almost always bearish and not kind of more likely trend reversing than trend continuation. That was kind of cathartic to see the market trade through that low as well. Because I was like, we're not totally hallucinating. Because you saw some big accounts with like 7-digit followers being like, oh, the trap and all this other stuff that you and I hate. And it was nice to see that they still don't know what they're talking about.
Yeah, I mean, some of them actually stopped selling their shit. Still remember other newsletters that disappeared at the bottom. Good is times. What it is. Yep.
But yeah, the point is well taken. And I remember doing videos on this price action that you're pointing out, which is that, even if you were to get a rally, it's a rally into this monthly level of resistance. I mean, dude, the monthly time frame has been straight fire, right?
Yeah, like, it's always been.
Yeah, exactly. Like I know it's slow and that's why people hate it, but you don't need to wait always for the monthly close to actually trade it or to get a directional bias or do whatever. Like if you give the monthly time frame like time and space, all the big swings have given you plenty of time to do business at those monthly areas, like from the top to the bottom to this midpoint. Like monthly time frame traders have been feasting, even though they only eat once a month. So they've got some crazy discipline.
I mean, the thing is with the monthly, I've been getting shit for looking at it since 2017, early 2017. And it's always funny when people are like, holy shit, how did you kind of get a clue that this was going to happen? And I mean, this doesn't happen like all the time, but for the big swings, I'm usually like at least somewhat decently positioned. And it's usually because I look at the monthly and I'm like, oh shit, this is at resistance on the monthly, or this is at support at the monthly. And then the monthly just does what it does best, which is produce big swings, right? And you just have to have the patience for it.
So what do you think of this 14K
Dude, if you get 14K, you buy the shit out of it. That's where you sell your house.
That's where I betray you and sell out and take all of our company money, whatever we've got in there, and deploy the treasury to buy punks and apes and like ETH.
Yeah, I'm down as long as 50% of that still belongs to me afterwards.
Yeah, I'm sure our accountants would have a fun time with that. Cool. I think it's enough market commentary, right? Like more or less majors, mostly focused on weekly support on the majors, but probably not going anywhere until this Bitcoin daily failed breakout fixes itself, and until it does, it looks like shit. Yeah. Any final comment on like trading the correlation and the S&P BTC 500? Is there a world in which maybe the breakdown on BTC isn't as technically significant as we think, and it kind of just got dragged into an unfortunate close by the S&P moving down, and then if the S&P recovers, we kind of get bailed out? Is that like max cope? I
think if the S&P makes new highs, Bitcoin is going to go up as well. Right. But I think it's not like this is all the S&P's fault. This is very clearly just crypto weakness, or like especially Bitcoin weakness, in my opinion. So I've seen a bunch of people try to argue that, say like, okay, yeah, the S&P is weak, so and this is just how it is. But it's not like we always have to trade lockstep. And if crypto actually had some strength, it would not be like you don't have, crypto doesn't have to copy it 1-to-1. I think it's only when crypto doesn't have like a strong narrative or strong interest in it going where we have this problem. And the fact of the matter is that's the case, right? We don't have like the next Bitcoin halving isn't for a while. And I mean, you have the ETH merge, but that's like ETH, not Bitcoin. And if
we also don't know what it is.
And we actually, So I think that's just a cope argument. But there is some truth to it, because if the S&P giga rallies and goes up a shitload, there's a good chance that crypto, especially Bitcoin, is going to go up at least a little bit. And it can invalidate this kind of setup.
Yes.
By itself. Like the S&P going up can invalidate a setup like this easily. It's just, I don't think the S&P is going to make new highs in the next week or two, or 3 or 4. I'd be very surprised.
Okay, stop. Stop counting.
Yeah, I'd be very surprised to see like it make new all-time highs in the next month or two. It just doesn't make much sense to me.
Understood. Let's get into some headlines. The first one I've got is that the Strike CEO, Jack Mallers, probably, I've butchered your name, I'm sorry, announces Shopify partnership, new payment network, and they basically partnered with NCR, which is a point of sale supplier, according to our friends at the block. And so a lot of retailers use this payment rail, if you will, and via the Lightning Network, I think, as he says, you're going to be able to walk into the grocery store, Whole Foods, Chipotle, etc., and you can use you basically pay with Bitcoin using Lightning Network or via the Cash App, whatever, right? So basically, mainstream rollout of Bitcoin payments to retailers. So my immediate reaction to this is going to sound really bad, is I don't really care. Stuff that pushes adoption is great, but like purely out of principle, and I tweeted this yesterday, I was like, have we learned nothing from Bitcoin Pizza, right? Where the whole point is, if you've got this like hard money, censorship resistant, deflationary thing that only goes up over time because fiat's a piece of shit and it's getting debased, but there's only 21 million BTC, etc., why would you use it for something, like a fucking burrito that you're going to be shitting out a few hours later, Or if you could buy one cup of coffee, maybe in a year you're buying a coffee machine if BTC continues to go up. Like all of those memes that people use when the price is going up as reasons not to sell, surely those same memes are transferable to not paying for day-to-day stuff using this type of money, if you will. Like I get the legitimization angle as, a property of money is the people use it to buy goods and services, and that's cool. And, giving people more choice is great. I just don't see why, unless they can avoid it or they have to do it, an economically rational actor, why they would use BTC for these payments, especially because this stuff is also US centric. Like these people are in America, they've all got like credit cards and mobile payment apps and whatever else. They don't need to be using BTC for it, right? Just if you hate the dollar so much and it's garbage and they print infinite and unlimited amounts of it, just use it for that kind of stuff and keep your hard money in a nuclear bunker somewhere. That's at least my take. Maybe it's too cynical, but I don't think the average American going to Whole Foods needs to be using censorship resistant FU money for this type of stuff. It just narratively doesn't make any sense. My really cynical point of view is that no one really cares that narratively, sort of Bitcoin technical developments and Bitcoin as money has lost a lot of mind share just within crypto, and people are more focused on stable coins. We've got Algo stable coins now. DeFi in general is like a financial product, and this is just kind of an attempt to not stay relevant. That's just way too mean. But I just think there's fundamentally a mismatch between what BTC is and these types of use cases. Although obviously, it's my money. No one decides what BTC is. Use it for whatever. Sure, I take that argument, but fundamentally, I don't think going to Whole Foods or Chipotle or whatever, that's not where I want to be spending my nuclear apocalypse money. Bit long as far as tangents go, but what do you think of this?
I mean, in general, there is something that is really, really good to buy groceries with, and that's the dollar. Yes. I mean, why just I don't really get the point either. It just doesn't make much sense to me. Bitcoin has always been for holding, at least for me anyway. And then you can and this is, I think, something that the Bitcoiners are very afraid of, because ETH is very different, right? ETH is for using. You can use it to do a bunch of stuff with it. Now it's super expensive and it's super shit to use, but it is at least used. And I would not be using my Bitcoin. I have my Bitcoin sitting around doing nothing, and I'm fine with that. And I never really got the argument that I want to be buying stuff with it or whatever. Because every time, like you said, you're like the next pizza guy, right? The next yes. Pizza guy. You don't want to be that guy. And you really don't want to be spending it if you subscribe to the idea of it anyway, in my opinion. But there's obviously different kind of folks that think about it differently. And I'm happy that they get to kind of prove their point, because we can kind of see how much it gets used, right? And if it's not used, I mean, I wouldn't be surprised if it doesn't get used, because why would you? But maybe there's something that I'm missing, and they kind of show it by making it really big and it gets used a lot. Who knows? We'll see what the future brings. But I think it's like you said, it's a mismatch between what Bitcoin is for most people and what they're trying to do with it. But we'll see.
You're using the hardest money on earth to buy fiat foods like Chipotle and McDonald's. It's just unacceptable. Yeah, I agree. I think the conference itself is bearish, right? It's like that's where the market's going down. Stop looking at the S&P, Do Kwon, Sailor, TA failed breakouts. It's just there's a conference and market number go down during conference.
Yeah, especially conference in Miami. Fucking UK.
The next piece I've got is Ukraine's NFT collection is still far from selling out after a week. And this is the Ukrainian government launched the collection with 2,000. It's only 2,182 NFTs representing a timeline of the war with Russia. After a week of being out, hundreds of those NFTs haven't sold. I didn't really know what to make of this because my immediate reaction was that crypto is insane, right? Because some scammer, like a real piece of work, will make like cum bots and they will sell out mega whitelist. We have to show like a picture of your asshole, all that type of stuff. They will sell out immediately and then 10x on secondary markets. And then you've got an actual war going on in Ukraine, and the official this is like as far as state legitimacy goes, like a real government wartime NFT gets released and it can't sell out. While again, cumbots, and please don't start a project called cumbots because we're not endorsing any of that, whatever. But it's just funny the kind of the NFT space. Like you've got this, as far as what's going to survive and stuff that maybe is going to be important in history and whatever. This can't sell out, but the amount of garbage and scams and celebrity-endorsed nonsense that easily finds a bid, that juxtaposition to me is a bit weird. I don't know if that comparison makes any sense to you, but I don't have any in-depth views on this. It just made me chuckle, like the garbage that we can sell out, and then you've got like a real war going on, the government embracing crypto, embracing NFTs, raising money via crypto. They can't even sell out their own NFTs. I'm just like, what is going on? Where is the money going?
Yeah, I mean, for me, I think it might have to do with the fact that people expected to get like this free airdrop that was promised to them earlier, which is, for the people that don't know, like the story started with Ukraine kind of like posting donation addresses in various cryptos and then saying there might be an airdrop coming for people that donate. And then a bunch of people donated. I think it was like in the million, 70 million or something. In crypto raised, and then they were like, nah, the airdrop's not coming, but we're gonna do an NFT drop. And I think that probably like riled some people up. But to be quite honest, like I don't think they marketed very well as well, which I mean, to be quite fair, they
can the devs do something? I know you're being bombed, but can you please improve the marketing? I know you're in a war, right? You're being invaded, fighting for your lives, but please do something about the NFT. We need the devs to do something. Okay,
yeah, I mean that's I mean that's
priorities, right?
If no one knows about it, for example, like I actually didn't know about this.
So are you going to go sweep the floor now?
I might buy one. Why not? I mean, that's the thing, right? Like. This is like peanuts for a lot of people. It's just they need to see it, and there needs to be like if this catches traction, I'm sure like CT could buy it entirely out.
So 0.155 ETH floor at the moment, and secondary trading volume at 13.6 ETH.
No, oof,
it's pretty pitiful. But yes, we need the devs to do something. That's a good summary. Not they haven't got enough on their hands. So here's the spicy bit. Luna Foundation Guard buys 100 million in AVAX tokens for a stablecoin reserve. And then you've got another algorithmic stablecoin, Frax Finance, may buy large amounts of major cryptos to back its stablecoin. So now we're in an era where you essentially have layer ones building out kind of almost fully closed or complete ecosystems, including stablecoins. And those are algorithmic stablecoins, and there's backing via other crypto assets. Look, I'm no expert on currency pegs and all of these mechanisms, etc. But I think you can definitely make like a 50 IQ intuitive argument that backing something that should be stable with stuff that regularly, at least once every couple of years or from cycle to cycle, goes down 80%, like probably isn't the most straightforward idea in the world, right? And that applies to like BTC and ETH, which recently went down like 80%. And, 50 to 80% drawdowns during down cycles, not only normal, but is expected, right? And if that's the case for the majors, obviously you get an exaggeration or an exacerbation of that in the altcoins, which go down a lot more and sometimes like disappear entirely. So the 50 IQ take is that you're essentially you're trying to make something stable by relying on something that's inherently unstable and actually just gets very volatile. And worse, we know that when the downside volatility really kicks in, the correlations converge towards one, right? You're not going to get some sort of, oh, well, I'm long this and short this and, you know, I've diversified my risk, whatever. No, like when there's a contraction, there's a contraction. Like everything fucking nukes and disappears, etc. And that's when you get your whole kind of liquidation cascade, spiral arguments, whatever. Now, are we the Bitfinex of Algo stablecoins, or is there something to be said as far as, you know, I'm all for experimentation. I think Algo stablecoins or like more DeFi-oriented stablecoins, which aren't just kind of holding USDC, which have basically unfettered blacklist powers. Like in general, I think if you're trying to make DeFi, like really DeFi, you do need like a stablecoin type of mechanism, which isn't censorable by definition. Or is somewhat censorship resistant. I'm just not sure about this trend of having a reserve of stuff that regularly, and that's in the real world regularly, you know, saying every 2 to 3 years is no big deal. In crypto, that feels like a lifetime, right? But in general, regularly goes down like 50, 60, 80% and does so pretty quickly and does so at the same time as everything else. What do you think of all of this?
I mean, it's basically backing one bubble with another one, in my mind anyway. Like it just reminds me of the ICO bubble, which we had when, like, for the boomers of us, or like for the non-boomers of us, ICOs back in the day basically invested in each other a lot. So they raised money and they had like a certain slot for the ICO friends where they invested, and then like it just went down the chain. Everyone was invested in everything. And then the market went down and everyone was broke, right? It was like a huge fucking bubble. And I kind of feel like this has the same risk because, I mean, that's the reason why ETH traded so low, right? Because a bunch of people like just invested their ETH everywhere and then like were just like scrambling to kind of sell the ETH to have money at hand because you couldn't pay out the ICO stuff. And it just all went to shit, basically. Now, I'm not saying this is going to happen again, but it does kind of raise some alarms in my head.
When I say systemic, you say risk. Systemic.
Risk.
Yeah, I know. That's where my head goes. Look, I'd love to live in a world where we're just super fucking wrong and this works and everything goes up only and the market never like viciously corrects and does so at the same time. We get like a dispersion effect or a decoupling, or maybe this is just like a bootstrap mechanism and then they diversify into like real world assets or more stable stuff to collateralize these stable coins. But like in its current form, man, it's something, you know, intuitively, I don't love this.
No, me neither. And the thing is, like, they're doing all of these, like, are doing this when the valuations are sky high, right? It's not like we're in the middle of a bear market and they're like investing in quality. They're basically throwing their money at stuff that is already up 1,000x and is already like hardcore bubbling. It's only a question of, is it going to bubble more? Or is it not? Or is the bubble going to stop, basically? And that scares me, but we'll see how that plays out. Like, I'm not smart enough to kind of calculate how far it has to go down for everything to unravel. I think there's Twitter threads about it, but not entirely sure if they're even accurate. It's just basically a thing where we're going to have to wait and see. But I'm not a fan of this because, like you said, it introduces systemic risk. And if there's one thing that we've learned in crypto is that if there is systemic risk, you're going to put it to the test, right? We've had that with BitMEX. BitMEX was a systemic risk. People were like leveraged along Bitcoin with Bitcoin. And then we tested that, right? We kind of like almost went to zero.
The price almost went to zero, like in the most literal sense, almost went to zero.
Yeah, there was almost no bit between zero and the price. And I kind of tend to think that as long as that risk exists, people are going to have an incentive to push price towards that. And I'm not entirely sure if, like, that's not a good thing for the market. It's obviously a good thing for a trader, right? I see this, I'm like, holy shit. I probably there's probably no world in which I could ever buy Bitcoin below 10K again. But if this all goes to shit, maybe there is a chance that I get to buy it under 10K again, right? And as a trader, that excites me, obviously. But as someone that wants to see the space actually do well, obviously doesn't, right? And I'm not saying Bitcoin is going below 10K again. I'm just saying you don't want to introduce stuff that can push it to the breaking point, because that's usually what happens if you introduce stuff that can push it that far.
Yeah, and it just feels like, I mean, the industry's grown a shit ton, but I still feel like it's pretty vulnerable to sort of contagion risks and just spillovers in general, right? Like when you've got like a big name selling off really hard, I don't think we still, at least at the time of recording, as much as people keep writing threads about it before the market vanishes like 20-30%, we're not yet at that dispersion market maturity point yet, right? And I think even if we were, if you have one of these like massive market cap tokens with huge BTC and altcoin treasuries start to eat shit, the rest of the market isn't going to be immune to that, even if we were in a more dispersed market, right? So again, I don't think any of this is like a short-term concern by any means, but in terms of the direction all of this is going, it's definitely worth monitoring. I'd certainly want to see some form of diversification or more astute treasury management, maybe with some recourse to real-world assets, whatever it may be, because we know that when things get volatile to the downside, A, they just go a lot further than people always reasonably contemplate them going, and also B, the correlations and spillover risk are sky fucking high. All of this stuff moves together. And as we saw with the BitMEX event, the COVID liquidation crash, whatever, all of these things build on each other and take you to places you never thought reasonable in the first place. And when we were talking to Sam on Technical Roundup, you know, his whole thing was a lot of crypto businesses just didn't have a model for price being that low because it didn't make any sense. But this is crypto. None of this makes any sense. So yeah, hopefully we're proven wrong. I'd love to be the boomer one on this, and there's like a clear safe model for Algo stablecoins. And again, I don't think it has to be a perfect model, right? There are trade-offs. Like if you want super safe, you go like Gemini dollars or Paxos or whatever. And if you want like slightly less safe, you go to like USDT, etc. You know, you have like a pretty diverse risk spectrum as far as blockchain dollars go, right? But I'd still rather, even on the furthest end of the risk curve, have stuff that isn't a blatant systemic risk. Maybe that's asking for too much in the crypto world. Final bit of news. This is just like a personal one. Bank of England's fintech chief says he has left to join Fireblocks. To any university students listening, wondering like how to get into crypto and are thinking of like a non-conventional route of doing it, which isn't like, you know, I quit uni and became a DeFi degen and yada yada, all this type of stuff. I really think there's a world in which you get your like whatever law degree, accounting degree, finance degree, etc., and then you go get a government job, right? Like some sort of white collar regulatory agency, maybe a law firm that liaises on this type of stuff, whatever, and you kind of build your clout on the other side of the aisle, if you will. From either just like a straight up state position, regulatory agency, as I said, or just a law firm that specializes and whatnot. And then there's a really high chance once you've built up enough of a resume in that space that you just get snapped up by one of these mega rich key, you know, infrastructure companies or exchanges, whatever it may be, like key players, if you will. And there's like it's the same old revolving door you get in traditional finance, where all the you know, all the bankers, lawyers, whatever, executives, there's a revolving door between that and politics. The most famous example being politicians then joining lobbying firms and doing fuck all for the rest of their lives, right? Just collecting paychecks. I definitely think there's a crypto equivalent where you start off on the regulatory side and then just get snapped up with a really nice pay upgrade from, you know, a Ripple-esque type of company, if you will, who'll just happily keep you on payroll to have your name and experience. Is that too cynical? I think that's like a legit piece of advice as a lower risk way to get into professional.
I legitimately think it's genius. Honestly, it has been like one of the easier ways, I think, for people that already have like a career to get in. Because like I see a bunch of people that like just want to quit their job and then go into crypto and do something there. But I think if you can leverage your job to get into crypto, you're going to have much more success and fun with it.
Yeah.
So I
And like
totally
they're just
agree with
hiring
you.
all these ex-chancellors, politicians, all these managing directors for the FCA. There's like an infinite market for these people, for these really rich crypto firms to snap up even like average regulators, and that's a decent way into the industry. You'd probably get paid way better as well. So
Yeah.
if you're that law student or accounting student or whatever, maybe finish up and consider that route. Unless you're some sort of trading DeFi wizard, I suppose, worth considering. That's all we have for the news, headlines, whatever. No Q&A this week. Duck, any preview stuff for what you'll do on your Thursday dating stream? Where is it going to be? Why are you doing it? When are you going to stop?
I mean, it's gonna be on Twitch because I don't want to put that stuff on
Soil
YouTube.
our channel.
Yeah, that's legitimately my worry. I think it's gonna be hilariously bad, but in a good way. But we'll see about that. I'm gonna like think about what exactly we want to do with it. Not entirely sure where I want to go with it, and it's just gonna be like a free flowing dating thing where I think we just talk about stuff basically.
Do you know what
I don't want to
the biggest
give.
issue is? And I think, I don't know how you'll address this or if it's possible to address. Like, for example, I've got like a friend. And this isn't just like, oh, a friend. Like this is genuinely one of my friends. And he's got a girlfriend now, but he's had a very long career of being successful with women on these dating apps, whatever else. As you can imagine from the tone of that conversation, I don't share that history of success on those apps or whatever. But whenever he's giving his advice, as well-intentioned as it may be, right, you kind of look at him, who's whatever number of standard deviations above the average, top percentile for like looks and whatever else. And then you look in the mirror and then you have to think like, is this advice really transferable? Or if you want to phrase it, in another way, how much variance is there? Like basically I can't expect the same outcomes integrating his advice that he would get integrating his own advice because our baseline / starting point isn't the same. Like, the X pickup line works if you're 7 out of 10 or above. If you're like a 4 or a 5, you're getting a restraining warrant, restraining whatever order type of thing. So that's always been my concern when like well-intentioned friends who are whatever really tall, handsome, good-looking, yada yada, start to give advice. It's like there's a built-in assumption that advice kind of works linearly across everyone, and it doesn't account for the fact that you may have pre-existing non-fungible features that make that advice work for you, whereas it wouldn't work for anyone else. You kind of see the point I'm making?
Yeah, I totally see the point. I mean, the thing is, like, you're not gonna get any like. That's like, I don't want to make it so that it's like a dating advice thing where I just say you gotta do this to do that, like get that. It's more of like, it's gonna be more about like be decent.
Listen, we all know you're a red pill misogynist, okay? Just get it over with, just come out, share your forum with us.
Yeah, no, but I think
the paid
like
mentorship.
In general, like it's not gonna be any of that kind of thing, like any pickup lines, anything like that. It's just gonna be more of like just telling stories, listening to people, and giving my opinion on it.
Okay.
Because I think, like in general, like for dating advice kind of thing, I'm not really qualified enough anyway. I've just always done my thing, and that's worked. And I think that's in general something that most people should be doing. Just be yourself. And I think that's gonna be like most of it, and then we'll see where the chat takes
That's the
it.
issue, right? The be yourself. Yourself is like, super tall, handsome, yada yada. Whereas someone else's self, it's like, I don't know what sunlight is, and I make weird noises in public. But maybe there'll be a follow-up session where everyone complains that your advice is garbage. It doesn't work.
I mean, we'll see about that.
We'll
yeah.
see. I think that's all from us. Leave a comment as to why you listen to Technical Roundup if you made it to the end of this episode. As always, thank you to the FTX app for supporting us. Get it. It's the best mobile trading app on the market. You've got your NFTs, altcoins, majors, and stablecoins. All kinds of stablecoins, including ones that aren't a systemic risk to crypto, sort of, I think. More on that later. Duck, take care to our audience. I will see you on Monday. Have an excellent weekend, and bye-bye.
Bye-bye.